In life, there are only two things that are certain: death and taxes. And unfortunately, when I was building this slide, I had a bubbling rage in me because I just realized how much tax we are exposed to. You're looking at VAT, transfer duty, income tax, capital gains tax, you're looking at dividends tax. So it's really important because SARS takes such a big piece of our income. It's important to know what that exposure is going to be, but also how you can be efficient, what kind of structure you can buy into so that you can scale a bit quicker. And that's what I'm going to take you through in this slide. Please don't get a bubbling rage like I got while building this. Unfortunately, taxes are unavoidable, but how much tax you pay is sometimes dependent on what structure and what decisions you make.
I educate people to reach financial freedom through property through cash flow positive investments, specializing in the low income multi-let residential market.
So the four main taxes that are applicable to the property investor is firstly VAT, value added tax. Second is income tax, transfer duty, and then the final one is capital gains tax. So let's unpack these four in a little bit more detail and where they apply. VAT is the abbreviation for the term value added tax. It's an indirect tax on the consumption of goods and services in an economy. It's quite a complicated tax, and I'm not really a specialist at it, but essentially this VAT is broken into two sections. You've got an output tax and an input tax. The output tax is what the vendor can charge on building or providing the service, the output tax. Then you've got the input tax. This is what the vendor can then charge onto the next person, the consumer, or another business, making an income tax, an input tax. So you as a company can charge a tax and recover the tax from SARS. So you're, as a company trading, you don't have to incur tax because you can zero rate it. Your output tax is equal to your input tax. Now your taxable supplies, you'll notice that there are certain things that are VAT taxed, and there are certain things that are not VAT taxed. So this is, certain supplies are applicable, certain aren't. And there is a limit to the range of goods and services which we are entitled to zero rate. So VAT is quite a complicated one. It's not applicable all the time. It's only when you're earning more than, I think it's R1 million in annual income, then you need to register as a VAT vendor. But under that revenue goal, you don't need to be a VAT vendor. And most of the time, it's not applicable to the residential space. Residential rental is VAT exempt. So that is only applicable really to developers or those going into the commercial space. I'm doing my first commercial deal at the moment, so I'll get some more experience on how VAT really applies. But I've mostly been in the resi space, so I've never really encountered too much VAT. So hopefully as I get more experience, I'll teach more. Income tax is the next one. Income tax is what we're very used to. It's the normal tax on which is paid on your income. So your salary. We all get a lacquer little salary, and then we realize that lacquer little salary becomes very little after tax is paid. Right now, in your personal name, you're working on that sliding scale. As a company, there's a flat rate of 27%. Transfer duty, the next one, is a tax levied on the value of any property acquired by a person as way of a transaction. So anytime a property goes from one hand to the next, from one company to the next, from one individual to the next, from one trust to the next, there is transfer duties payable. So here you can see the 2023 fees at what SARS is going to be charging. And please, guys, always go to SARS's website. They update the taxes, and this is a changing market. So if you're watching this video and it's 5 years on, make sure that you're not using these numbers. You go and look at SARS's website. So to understand transfer a little bit more, it's only applicable to sales over 1 million rand. Under 1 million is transfer duty exempt. So oftentimes what developers will do is they're selling a property for 850 or 900, and then they say no transfer fees or transfer fees included in the sale. Well, there's no transfer duty because it's under 1 million rand. So what they try and confuse you. They say no, transfer duty is included in the sale. Of course it's included. It's less than 1 million rand sale, so there is no transfer duty. The purchaser, you as the buyer, will pay the transfer fees within 6 months of date of acquisition. Usually you pay it up front. And then you're either paying transfer duty or VAT. So if you're VAT registered in a company, you're going to be doing a VAT transaction. If you're in your personal name or the company's not VAT, it doesn't have VAT because it's VAT exempt, it's in the residential space, then you're paying transfer duty. The final tax is capital gains tax. This tax arises when you dispose of an asset for proceeds that exceed its base cost. So if you bought it for $1 million and it's now worth $2 million, you're made a capital gain of $1 million. That's what's being taxed. So it's the exceed the base cost, whatever was more, whatever you sold it for more than you bought it for. Now, capital gains tax is different for different entities. You've got your individuals, your companies, and your trusts. I do have a series where I go through each of these structures in more detail. I'll talk about the personal name, the company name, and the trust, how to set it up, what the tax advantages and disadvantages are. So go check that out. This is a common question. What can you deduct? What are deductible items in a property transaction? So let's say you've got a company and you want to offset your profit with some items to lower your profit so that your taxable amount is less. So from a cash flow rental perspective, you are able to take these off your profit. So you can remove rates and taxes, you can remove water and electricity, bank charges, interest on your bond repayment, not the capital portion, levies, accounting costs, leasing commission, repairs and maintenance that have been done, not your provision, and then insurance. On the flipping side, the proceeds from the sale, the base cost, obviously, the agent's fee, the 10% or 5% commission that they charge, other sales costs like your certificate of occupation or your certificate of compliance, and improvements. The only thing in life that is certain, there are two little things, death and taxes. But the amount of tax that you pay is dependent on the structure that you have. So make sure when you're investigating whether you want to invest in your personal name, a company or trust, that you understand the tax implications. Is this a VAT entity or not? What is the income tax bracket? What are your capital gains tax? And then finally, what are the transfer duties? Or if you're investing in the VAT experience or in the company experience, what's your VAT numbers? And then you can make an informed decision.
I hope you enjoyed that video. Give it a thumbs up if you did. Please go and check out my YouTube membership. You get access to exclusive content. I'll also analyze live deals on your behalf. So go check out my YouTube membership for that and so much more.